friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis show where we look at what happened in the market during the trading day and what we can learn from it and how we can plan for a better trade for the next day. So we had a V-shaped recovery today. Momentum is falling in sideways. Let's get into the details and see. Here we have the plain charts, and we have a hammer, and that big size shows the kind of price action that happened. It's a recovery. It has fallen down. 50 moving average supports, bounce, and then the hammer, green hammer. Banknifty also hammer with a slightly larger, almost a hammer. You can't say that hammer because the size of the head is more. The big size indicates it's a bounce up that happened. Intraday price action, if you see, this is what happened. V shape, a gap down, recovery, complete recovery. A gap that's almost 300 points from some 425 close. It has gone to 200. It's a 200 point down, 200 point up. That's a kind of reversal, buy on dips or whatever you call it. That's what happened. And what does the Bollinger Band say? Further skews or contraction or narrow range, between the moments, and if this flattening out or contraction or the skews extends further for a long time, it's evident that it will fall down or move up. Either of that will happen. So the expansion has ended completely on indices both, right? And the bearish bias is there in the Nifty as per the Bollinger Bands, and Banknifty is still having bullish bias in spite of the consolidation because of the fact that it has closed above the median 20 moving average basically. So that's what the change in polarity bounce possibility is still there because it's at a resistance zone and taking a support there, and then now further bounce from here can happen. Banknifty as well as here. If you draw a line here, this is a resistance zone, which is where it has taken the support and then bounced. Further bounce from here is possibility. Change in polarity bounce seen on both indices. And moving averages we already seen. There's another view of that. Weekly view of that. If you see, this is what is happening. We have still weekly moving average. We are still very far from that. It comes to near to 17,900, and the 23 Fibonacci retracement level is at 18,000 level. So very beautiful two supports down there. So it can fall to any of those places and then simply move back without anything wrong in the pattern at all. And that is exactly what it may be planning to do. Similarly, Banknifty also 41,150 is where the moving average, weekly moving average is there right now. And you can come anywhere there. And Fibonacci retracement level is at 41,500 nearby zones, 400 basically. 41,400. So you can retrace still there without any problems. So weekly candles we can't see now. The week is still has many days close. So today's price action you can see 50 moving average, exponential moving average is what the bounce has taken up, and today beautifully climbed back and closed above the moving average, 20 moving average, exponential 20 moving average, right? So a lot of supports and beautiful price actions. That's exactly what happened. Let's get the numbers and see how much you lost and gained. It's a flat close finally, end of the day. 35 points down, that's all in Nifty, and 54 points down in Banknifty. So price action today we have seen, moving average supports, bounce ups we have seen, change in polarity we have seen, and weekly we have a trend line resistance, which from where for multiple weeks it has now broken out, and now it is making a retracement of 3 to 4% as of now, and 2.5% of Banknifty somewhere with that. So more retracements could come in. It's still healthy as long as the levels that we seen here is not broken, on the weekly, until the 18,000 and or the 17,850 zone or 900 zone. Till then it's fine. It should be fine, right? So that's the kind of price action that's happening, and that's it. Moving support resistance levels would be 18,442, 18,530. Downside supports will be 18262, 18103. That's very crucial support. 18103. It's a confluence of the previous swing low as well as 23 with natural retracement levels. Banknifty 43,760 is on upside, previous swing high, and then 43,984 after that. Then 42,961 and 42,740. Let's look at some more details. Yeah, one more thing I wanted to mention is that there is on the daily charts there is a head and shoulder pattern. Just been broken out, but it's trying to climb back. Nifty also has got a head and shoulder. So head and shoulder, if the neckline is breached, it can go equal to the height of that head and shoulder. So it's small height in Banknifty, small height in Nifty also not too big. So it might have already gone half of that. Some more retracement could happen and it can bounce up. But the shoulder is basically more powerful on monthly and weekly charts and not on the daily. But still, when it has come, I'm just mentioning that. So larger the time frames, more effective is this pattern. Also, I've drawn a small parallel channel, and you can see that the channel bottom is still not breached. The close has happened much above that. So basically, the price action has taken a support of this channel and the small channel on the top. It's a Nifty we are talking about. That's exactly what happened today. So beautiful support bounce has happened today. Multiple things in favor of bulls. Possibility, support bounce, further up move, end of correction, all these possibilities there. And also there is a possibility that pullbacks can be more because Banknifty is hardly corrected. 2.5% only is pullback. So keep a lot of that levels. That's all that you can do. The probability of the supports and resistances are there. All demands is clearly showing bullishness, sideways movement, sorry. And there is consolidation. We see that momentum is actually slipped into the sideways already, and it still maintains that it is falling today. It will not, move up. So momentum has gone. So it's lost the momentum, but it's in the sideways momentum, not in the bearish. Right? There is a bullish momentum divergence, which is positive reverse divergence. Bullish in nature, it's seen on the weekly charts of the Banknifty. It seems to be working because it is taking. If you just look at the weekly charts, you can see that the price is not on weekly charts. Is a mistake here, and this is Nifty. Sorry, so Nifty charts. You have a price moving down. Price moving up and then momentum moving down. So it's a positive reverse divergence, and the bounce it's almost confirmed, and the targets can be till the new all-time 18,800 new all-time high levels up till that can go. So that is there the positive thing at the Nifty weekly charts, but weekly is still to end. Many days were left for that, so we don't have any confirmation for that. As of today, it's confirmed, but the chart is weekly, so week has to end. So momentum is sideways. Trend is also possible in the bear zones, and there is more strength in the Nifty and less strength in the Banknifty. But both are in the bear zones. Demat negative as per the DEC indicator. Mix is spiked likely 2%, 13.76. So it's below 14. It should be fine. Mix is not spiking more than 14. It spikes more than 14, comes back, and then falls and closes below 14. That's what's happening since last 7 days. One day up, one day down. Put call ratio has improved 8.86 and 86 is what it is for both, which is closer to the bullishness you can see. Right, which is why showing some bearishness. One is Banknifty is long unwinding, another one is short build-up. This is wrong again. Sorry. So it's a short build-up, which is why that happened. Options why showing a very small range, narrow range on the Nifty. That's 18,600 was the highest. Call rating is seen and 18,300 was the highest. Some supports are seen. The highest put rating is seen. From the option writers, 43,000 and 44,000 point gap is there for the Nifty. So writers are expecting the Banknifty to correct more. Right? So, but it's at 43,000 actually, very close to that. It is not given up. That once that gives up, there could be long unwinding and powerfully work on the bearish side. So you have to keep a close watch at that 43,000 as per the option writers for that, and for the December 22 expire. This year is more towards bullish, but overall, which is why is saying had some unwinding bearish build-up that happened today. That's all. Otherwise, is okay for the next expiry. Sector will watch. If you see IT in the middle, they close green. Auto, FMCG close red. Realty also closed red, right? But realty closed greater than 1%. Others closed red with less than 1%, and pharma has closed flat. That's the price action. But metal is only sector that's having some short-term bullishness. The rest is all sideways, and even pharma and IT has gone to the bearish zone. So nothing much promising there. Across sector weakness, see. If you see Reliance and TCS and ICICI Bank perform today, close green, right? Varying proportion, 8.87 Reliance that held the markets up. TCS also held the markets up 1.3% up. ICICI was less than 5.5% of up more green is seen. HDFC Twins and Kodak Bank closed red. HDFC closed red trading, right? Less than, but very less than 1%. Banknifty closed flat. Not Banknifty. Twins, Infosys closed flat, right? And so HDFC and Reliance, but not Reliance. HDFC managed to maintain the bullish momentum, right? While Infi and the Kodak Bank are in the bearish momentum. The rest is all sideways on some of the 5 critical stocks that we consider. That's about the sectors of heavyweight and the heavyweights. Heavyweights, mixed picture. Only the HDFC may be showing some bullishness. It's consolidating and having a flat pattern. If you see the charts. Institutional participation, if you see, it's green day from both sides. DAS and Fyers both have bought almost equal amount of 450 crores and 495 crores. So not big, not small. Right. Some medium kind of buying has happened from the institutions. So institutions are not selling, which is good. Crude oil again flat. It's maintaining the less than 76 levels and it's a sideways momentum. Not spiked to the bullish ones yet. It's in a parallel channel. You know that we have been discussing that every day. We need to show the charts. Dollar index is also falling down. Not 4 it has reached, but not too far away from the multi-decade highs. But the rupee is bad shape. It is rising up with bullish momentum, 82.68 now. Right? So every day it's losing grip and weakening even further. It's not ready to gain any strength at all. USD rising up. Gold is rising up after having stayed some consolidation done on the resistance level. So it is now showing some spikes. Exchange, Singapore Exchange is flat as of now. Using as kind of flat as of now. So, but overall, if you see, using indices has this problem of low volumes because of the festive season. So, cannot expect that the market to do any rally, right? So that impact will be less till the back in January 1st or 2nd, right, when people come back from vacations. So big participations will be less. And the chart is clearly bearish with the descending wedge reversal that's happening. So it's dropped from the resistance zone. Right, let's hit the resistance and then reversed. Third week of bearishness that is continuing across all the other indices. So this is Nasdaq that you see. This is S&P 500 that you see. All are descending edge breakdown reversal is what is happening. So we have to keep a close watching, but volumes are not there, so selling may not happen until they come back. If it unless some major events comes in between. So the major events that is there for the rest of the week is on Thursday we have the US jobs claims that market volatility could come in, because if that turns out to be worse or very good, either of that. And two topics for the next few days. Bharat Forge swing trades, basically. Bharat Forge is an auto ancillary company, and it has been doing good. It's cup and handle breakout. It's gone only till the 50%, so coolly can go above the 50% also. The support zones are clear. It's a breakout neckline, so you can take risk up till that and have swing positional or trade. But the only thing which I didn't notice earlier is that there is unconfirmed. It's a bearish direction where the momentum is rising and the price is falling. So you have to be a little careful, but it may get negated if it further moves up inch above. It should be okay here. So with tight stop losses, you can play it. Probably stop loss can be 817 max for a short trend swing trades less than a week. Positionally, you can extend it to the neckline. And so all this, right? So it's bullish overall with the momentum. Indicated RSI is also about 60, and trend is also rising up with strength in the DMI positive zone. So that's Ford's law, and another one is Bank of Baroda. Bank of Baroda is having a rounding pattern breakout, multi-year rounding pattern 2018 from onwards. That's what is happening. Good positional opportunities can come in. There is a divergence. No, divergence is not there. Divergence is not there. Neither bullish nor. But yeah, we know where the stop loss has to be. Right? And positional play also can be done on this. And entries are always not, this weekly charts are taken just for showing it. So entries always not taken if there is a price that moves about this previous candle's high. So here there is a bullish divergence. That's why I picked this actually. This is a positive reverse divergence where the momentum is falling down and Fyers moving up, and it is more or less confirmed because it is spiked up after having taken support at RSI 60. So this bullishness here, so there is every chance that it can go up to 194 kind of levels for sure, at least. After that you can trade. So there is a swing opportunity here in Bank of Baroda long. Having studied all the parameters, let's summarize it. Today was a buy on dip. So V-shaped recovery that happened from the support bounce. That shows people are sitting there to buy. So there is strong market, no doubt about that, but it's a consolidation period. Volumes are less, vacation times are there, so it's consolidating. So how long it will consolidate? No. As of now, it shows it's sideways price action. That's sure. Remember, we had a breakout from all-time highs just few weeks back. Now we are retracing, 3 to 4% of correction is what is happening. So that correction a little more further down, or it may end up somewhere at this place, or it may consolidate for some more time the same place and then continue. All of these probabilities are there, but as of now, we are in a breakout pullback, right? And consolidate. Now the price is moving less as a short-term basis. If you see the price is moving less, moving averages, momentum slipped in sideways and falling. Trend is bearish. US markets are resistant. Spot special is less. Price action is little bearish. But at the same time, we are at a very good support zones. Change power difference possibilities there. Moving average supports are there. All these possibilities are there. Right? But that just tells me that it won't be a big crash that may be happening. So, but it does not give me indication that tomorrow is bullish. Tomorrow for me it is continuing to be mild bearish and sideways. That's what it is. And medium term 19,000 going to be that easy to take away. It may need some more correction for that to be taken out, and that pullback action is what is happening right now. These markets are at resistance and showing some reversal symptoms. You have to keep a close watch of that. Futures drop, fine, very good. Remaining there less than 14, fine. Our index is pulled up good, but rupee is not bad, and crude has dipped, which is good. So these are all positives, but not at the end of this calendar year when people are holidays probably. Right? So 1800 is a very good support on the outside for the Nifty, and 18,500 above is also indicating that yes, we are done temporarily with the correction. 4,300 and 44,000 similarly on the Banknifty would indicate up in our low side. So as I usually say, protect your capital. That's all that you are left with. If that is not there, you're gone. You're out of business. So have stop losses, have tight stop losses, have position sizing correctly done. When the VIX is rising up, spiking up, cut short it. Always have hedge positions when you're taking overnight risk. So things that is in our hand, and learn the probabilities, charts, technicals, everything, just to learn what is a probability. Don't blame the markets may or may not respect it. It's up to the market, but we can think of probabilities. That's the best that we can do. The rest is all position sizing and protecting your capital. So my view is that mild bearish continues and sideways mixture with this mixed with bearishness, mild bearishness. That's what my view is. So you can differ from my view, but the study parameters of price action and patterns, candles is all the same. Your view can be different, right, if you are able to justify it. So if this study of the markets, this technical analysis help you in some way in your trade plan, for the next day, then considering the like button, put in your comments, feedback, subscribe if you're not subscribed, please share to maximum be. Have very few subscriptions, that's all you get motivated. Thanks for watching. Happy trading. happy learning, happy investing. Bye bye.